If you bought fixed deposits and T-bills last year, what are you doing with your cash right now? If your answer is, I don't know, don't worry, you are one of the 26% who are not sure and lost also. So in my Telegram group, we actually did a survey, and I was actually shocked to find out that there's so many people that are really unsure what to do with all the cash that's lying in the bank account. 26%, that means 1 in every 4, correct? And if you look below it, you'll see 12% have voted to buy this. 26% have voted to buy something else, and 16% have voted to buy yet another thing. So if you're curious to find out what they are, continue watching. Hi guys, welcome back. Without further ado, let me show you the entire survey results from my Telegram group. And if you're keen, again, the links are below for you to join. Over there, you'll find holistic discussions about finances that hopefully can help you in your journey. So let me go through the first in the list, which of course is 26%. I don't know what to do. I'm lost. It's okay. Later, towards the end, I'll share a few solutions. So stay tuned right to the very end. Second on the list, 12% are buying bank stocks. If we see performance for bank stocks, you realize that in the last 3 months, it hasn't been too good for banks, correct? And the reason is quite simple. Fed has announced that they've cut rates. And before that, there's market anticipation that they'll be forced to do so. Banks, like what I've said many times on this channel before, they make money through interest income. So if interest rate is falling, naturally that has some impact on profitability. So this over here is STI index, top performance filtered for 3-month period. And what you see at the top is Yang Zijiang, who is rebounded with a 51% gain in 3 months. And slightly below it is actually Venture Corp with 24% gain. Venture Corp was highlighted by one of my members who has mentioned favorably about venture. That is just one idea, not investment advice. So do your own proper analysis first. Today we're just sharing ideas on where to start your journey of research into before you deploy any money. Venture has been a steady dividend pay, and from what I understand also, they have $1 billion of cash in their corporate balance sheet. So going back to the 3-month chart, we realize that MPACT is high up on the list. Mapletree Industry Trust is also climbing this list. These are two of the REITs that I own. Hopefully the tide is finally turning. I know it's been a long while. I started buying since 2022, so holding until now has been a 3-year journey already. But what I've boxed up at the bottom in yellow is OCBC and UOB, who are languishing at the bottom of this table. UOB in particular is minus 3.7% over the last 3 months. So back to our survey findings. 26% have voted to buy REITs. How have REITs been doing? Let's look back at our summary table and let's filter now for year-to-date performance. I've also divided this into top half and bottom half. What we can see is REITs are actually somewhere in the middle, correct? CICT is over there, MPACT is over there, Frasers and Boy Trust is over there, Capital DC and also Ascendas. Only DBS is in the middle of pack. UOB and OCBC are languishing towards the bottom. Maybe again with recency bias, that's why the voting has been more for REITs, but actually that wasn't what I voted for. For myself, I voted for the 4th option, which is I'm buying into other areas of growth. I look at my purchases over the last few months. I realized I bought on IFAS, I bought on Nordic, I bought on SETS, I bought on Hong Kong Exchange, I bought on Ethereum, and I've also bought into Palantir. So I've been also gradually buying in a lot of spaces and actually into things that I already own and averaging into them with my new income. So if you have a pick of your own that you'd like to share with us, leave in the comment sections. Let's have a healthy debate. And as always, if you enjoyed this presentation, I'm filming this late at night, so smash the like button. Thank you for the support, and let's move on to others on this list. 1% have voted that they are buying other forms of investments. Actually, I want to check, there are 2 voters over there. And they have bought structured notes or equity-linked notes. Personally for myself, I know some of the hidden risks involved. If you haven't seen before structured notes, they look something like this, whereby you are given a guaranteed yield. And of course, on the flip side, you are taking on certain risks from a structured note that have embedded certain options within it. If you see the summary table, you see 12% per annum, which is 1% per month, correct? Looks very appealing, but as always, the devil is in the details. Make sure you're comfortable with the risk, and most of the time I would suggest it's actually okay to go for simpler products. Let's move on back to our list. 11% have voted to buy bond funds like PIMCO Income. 11% have voted to buy bond funds. And I just suggested a name, PIMCO Income, which has been very popular going around. But again, not my personal favorite. Something I've highlighted before, even though the yield looks very nice, 6.53% as you can see over here, you realize that very often the NAV has been shrinking. The fund buys into bonds and may invest into US institutions where you may or may not be very familiar with. So as always, don't judge an investment purely by its yield. Make sure it's comfortable with your risk appetite and make sure you do your due diligence. Let's go back to our list. 4% have voted to continue to still buy T-bills and fixed deposits. Latest rates are 1.44% only. Slight uptick, but 1.44 really cannot beat inflation. And back to our list, 4% have voted to buy gold, Bitcoin or altcoins. Bitcoin and altcoin. As of this time of filming, you realize that they seem to be in a correction mode right now. Bitcoin itself coming 10% down, Ethereum much more, and some other altcoins even in minus 20+% category. So they are indeed quite volatile. And are they more volatile than gold? I was looking at evidence and the answer is quite likely yes, because what I see in the gold's 1 year chart is that there are periods of correction, but it does not appear to be as volatile. Main story of this image again for gold price is that it's not capital guaranteed also. There are periods where prices come down, so don't be too bullish on gold, where I understand it's very popular right now. With that, let's move on to the next segment for today, which is answer some questions you might have. And I'd like to make my first guess, which is, hey Josh, the market is so high right now. Is it the right time to buy or not? Logical, correct? Because if we see STI index, all-time high, S&P 500, all-time high, property market, all-time high, gold, all-time high, Bitcoin, all-time high. Everything seems crazy right now, correct? Especially when you have cash. And you look back, 1 year ago, the prices for everything weren't the same one. If I invest now, it seems dangerous. Well, is that really true? I found a creative way to flip that question back to you. Do you like holding something like this? Drop, 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 drop. 5 arrows whereby it dropped. No, right? Crazy to hold something like this, right? And what exactly is this chart? This chart is Sing dollar against gold. And I want to use this because it's the easiest that I can invert to illustrate that an asset that potentially can beat inflation, if you don't own it, you realize your cash value seems to be dropping all the time. We can interpret this chart also as Sing dollar has lost 66% against gold in the last 10 years. If you see it that way, would you think it's time to run? You wouldn't think cash is so safe anymore, correct? So if markets are high now, 10 years later, it will be higher. If cash is low now, 10 years later, it will be lower. So hopefully you choose wisely. Question number 2. Josh, I don't know what to do with my cash because I do need liquidity. I hear that very often as an objection. So the question I'd like to ask back you is, why do you need liquidity? Your answer might be, maybe I need it for family emergency. But again, how often has that happened? There are, I understand, I have private clients also whose parents have suddenly been diagnosed with cancer and the cost has been bigger than expected. So we are withdrawing some monies from the investment pot. But as you hear it, we are withdrawing monies from an investment pot which has no lock-in and is still liquid. You may not need to always keep cash just for emergencies and to help in any withdrawals. As long as your assets are liquid, you can always cream off certain profits to help in these situations. Again, I'm not mentioning to invest emergency cash. I'm just saying that fear in many times seems to be overstated. And I've even experienced real life cases before and it can be handled. The next common idea about liquidity then becomes, hey Josh, my job is unstable. That liquidity is important, what? Okay, but if you think about it, job instability, then it becomes a game of keeping your expenses low, correct? It's more of an expense problem than a liquidity problem. If your expenses are low, you realize you don't actually need to keep that much cash and be able to survive for many months or many years ahead. Very often with these objections removed, the real reason will start to come up. And it usually will sound, what if I lose that money? Liquidity becomes, I don't want to lose money. Then we need to address it. It's not a liquidity problem, it's a loss aversion problem. That's actually where I coach clients on how to invest and how to understand retirement with different sources of income. Yes, we need some safe assets, but with interest rates coming down, we can always think broader and diversify the asset base. As always, if you're looking for fee-based advisory work for your retirement, look for my links below. It's something I can help on a one-to-one basis. Showcasing again, these are raving reviews from my private clients, and hopefully I can build something that is useful and impactful for your own retirement. Personally, for myself, I feel loss aversion problem needs coaching. There needs to be positive experience first. Maybe previously there was some losses or some speculation that went wrong. Unlearn it, rebuild that experience, and see the journey in a different light. Naturally, that confidence will start to come in. The next part is to prepare better. That's where I come in also. Walk the journey, especially when it's turbulent. Many times I say my job is like a pilot. When markets are smooth, you buy anything, also make money. But when it's turbulent, that's where the pilot comes in. How to steady the aeroplane. We've seen before in tariff crash, minus 15% in a couple of weeks. That can be very scary, especially if you haven't anticipated that this kind of volatility can kick into the market. Avoiding mistakes then will be vital. Sticking to investment plan even in these times would also be vital. So investing again is just not what to buy. And there's a saying, it's not about the intelligence, it's about handling emotions. Whatever you heard today, don't invest because Josh said so or anyone has voted for it, or simply because you have this FOMO. What we have voted there, no one knows whether it's right or wrong because only time will tell. But I'll strongly encourage you to invest because it is time to be a bit more balanced in your assets. It cannot be 90%, 80% into safe cash assets. Now we may be facing a world of lower interest again. Having a balance and mixture of assets might be a much better approach to foolproofing your income streams. Thank you very much, and with that I'll sign off from here and invite you to some of my previous videos that can help you in your journey too. I'll see you there and smash the like button as always. Take care and goodbye.